Hey there, traders. What's going on? Jamie Setley here. It is the first midweek strategy webinar of 2020. So happy New Year to all of you out there. And before we start, just let me know that you can hear me and see the screen. Anthony says yes. All right, great. All right. Okay. Why don't we just start as we often have over these last couple of years and take a look at US dollar, if I can find what I did with that chart. Hold on. All right. So this is your FXCM Dow Jones Index, and you'll see when I publish the swing update later today, I wrote deja vu for the first words of the analysis, because it really is deja vu. I mean, for one, first of all, this is a very important trend line. Okay, right here, this dark bold one, which is from the 2011-14 lows. The reason why I assign importance to it, more so than just what's happened on the line itself, is that you can see when you draw the parallel, right, from these highs, that nailed the top all the way back in 2017, right? So, once we kind of broke it back here in early December, to me, that was really key. I was like, all right, the dollar's finally on its way down, right? We came back, nearly retested it right before Christmas, and then turned down again. Well, lo and behold, on December 31st, we did not get a break. We got another bounce, and now we're essentially back to exactly where we were right before Christmas, and it literally is just kind of ad nauseum, no resolution to this. So really all I can say here for the US dollar index is that 12,320, okay, which is essentially where we, just a bit above where we are. 200-day average is right there, up to about 12,340, which is going to be that line, right? That key line that goes all the way back about 9 years. You better find resistance between there, because if we don't, then I have to turn dollar bullish based on how I look at things. So, it's like we've had our chance to break. It didn't really sustain it. It still could, right? But you better find resistance up here. Otherwise, forget about it. Dollar, generally at that point, I'd be turning bullish at that point, which, is kind of a pain in the ass, considering that we've had such great short setups on the dollar for so long, but they just haven't played out, right? And if it's not going to work, it's not going to work. So anyway, still thinking lower, thinking bearish on the dollar up until you get a sustained break above 12,340. Okay. Now, one thing that I did do, Bloomberg publishes kind of like every single forecast or kind of comment from every single bank and big investment institution, all globally. And they've got, all these different sections. They got multi-asset, they've got stocks. They're looking through it right now. Hold on here. They've got find this. Bonds, currencies, commodities, credit, you name it. So anyway, I went through, it's usually a pretty good exercise to go through all of them to get a sense of where the consensus thinking is, because consensus thinking is usually wrong. Now, in this case, there's really no, I wouldn't say there's a strong consensus either way or the other. Like the forecasts or comments are very neutral for the most part. No one's really talking about much of a move in FX at all, which should not be a surprise considering FX has not moved hardly at all for years. But these big institutions, they don't like to deviate too far from what's just happened. They kind of think linearly, right? But one thing I will note is that just going through the comments, I counted 21 what I would consider kind of negative comments to the dollar and only 6 positive. So while there's no strong opinion, it seems, on the dollar here, if there is a consensus, I would say it leans more to the downside than the upside. So that alone kind of scares me a bit, and which is why I'd say that if we did go through this 12,340, I think you'd have to turn kind of bullish the dollar. So again, I still don't know if I would even consider this a consensus, but it's not like people are saying the euro's going to 130. It's like, the most bullish forecast you could find is like 115 on euro. And again, the comments are very, very neutral, but whatever. That's just a little piece of info that I wanted to pass along. Okay, so let's keep going. Let's look at DXY. All right, so again, different symbol, same story, and that is, if we had our chance to break down here late last year, which was 2 weeks ago, and we haven't done it. And if we're going to go lower, really have to find resistance. I say at 97.70 or so, and that's 3 things: 200-day average, trend line from the highs or line off the highs, and just a decent horizontal level. Frankly, I mean, highs all the way back to November of 2018 are 97.70. Tells you how much we've moved in the FX market, right? Here and there, you've got some decent resistance, support, resistance, what have you. So again, want to see that level hold as resistance. If it does not, then kind of tough to be a bearer here. Maybe would consider a short up at 98.80, but whatever, just live in the present here. And if we do go through 97.70, at minimum you go neutral and look higher towards 98.80. Okay. So, again, in light of NFPs tomorrow, this is kind of an important day or couple of days coming up here for DXY, US dollar, and obviously dollar pairs in general. All right. Dollar Swedish krona, which is kind of a decent barometer we've talked about a lot. Again, 200-day average, not surprised, right? This is what I like to call kind of the dollar bellwether in terms of being a leader for general dollar strength or weakness. And this short-term fork here back to September has actually been pretty good in identifying support on the median line, bounced each time. If you look at closing prices, you can see it even clearer, but upper parallel is essentially now. And if we do spike through it, you've got the 200-day average, former support, now maybe resistance now, and you've got the underside of this line that goes back to March, right? It's off the March and June lows. You can kind of screwed around with it back in this early December. We broke, and now we're coming right back to it. So you do know exactly where to look here in terms of dollar Swedish krona, right? Again, this is all saying, this says the exact same thing as as DXY and US dollar. It's all saying that we're at key levels and we better turn down from, these key levels. Otherwise, the dollar's probably not a bear, right? Okay, let's move on to euro quickly. Euro, first of all, I want to bring in this super duper long-term chart. So this is more important, the volatility. Remember this one? I published this one a long time ago. It's odd, but the average true range, it's like 65 pips seems to be some sort of a magic number. Back when at the time we had a record low ATR reading. By the way, I do 20 for ATR. We had a record low ATR reading back in July of 2014, right? That was the last real low vol period. And we just obviously went below that just recently here in the end of November and early December, and then we turned up from that low ATR reading. But once you went through 65, that's really when things accelerated and ATR went through the roof, and you really had a much, what I would call, better trading environment naturally, because the market was actually moving. So as it stands now, right, and also that 65 level, you can see how many times you bottomed as support. Kind of seems silly calling ATR support level, but ATR was support at 65 for a long time, and it was resistant throughout all of last year, funny enough. So yesterday we actually poked above that level, or 2 days ago we poked above that level and we were back below it now. But you can, it's not hyperbole to say that we could be on the precipice of a much bigger move in volatility or volatility explosion based simply on this chart. Okay, so let's see what tomorrow brings. But in terms of euro, the DXY chart actually seems to be a little cleaner to me, along with US dollar. But in terms of euro, excuse me. This, by the way, this data on this platform this is a kind of a bad tick. This is not a real tick here on December 24th on Christmas Eve. So just FYI, don't pay attention to that. If you look at like a real, feed, you're not going to have this spike there. So whatever. But we did fail right at the 2019 trend line. And what I'm looking for here, you could, I guess, potentially bottom right on this parallel like today, right? Literally no way to know. We have NFP tomorrow, you could go any which way, obviously. But if you do slip a little bit lower, then essentially 110.55 is the trend line from the October and November lows. So that really would be your last spot, to potentially get any sort of support for euro. Below that, I don't see how you're not, bearish euro at this point. So yeah, I'll throw that in there. I want to see if you've got a longer term, if we have a longer term kind of level here to look at. That channel, center line down here, nothing really. Nothing really. Okay, heading into tomorrow, I don't have a decent euro setup here, by the way. Again, this is a level maybe, 10.55, a level maybe, but we've got to see something like a good volume reversal or something, right? Or start to get above some levels before I would actually think about the long side in the euro as far as an entry is concerned. The other dollar pairs, though, are interesting. Hold on one second here. I've got to figure something out real fast here. Okay. Bringing in a slightly different chart here. I want to bring in here's a slightly different chart on Euro before I move on to what I consider better setups at this point. But here is Euro. This is going to have the, you're not going to have that silly spike that didn't happen on this chart, okay? But if I look at it, say, an hourly, let's go to an hourly chart. All right, there you go. Trend line. And if you look at a very short term trend line or channel from the highs here, you can see that you do indeed kind of cross about that 110.50 area that we talked about, right? And that would be, frankly, it would actually be early next week, but you know, if you spike down there tomorrow in NFP, I'd pay attention to it. So, you know, barring a move higher, if you do get a spike lower, pay attention to 110.50 in Euro. Okay, so that's good for that. Let's move on to, let's go to pound now. All right. Where did my question thing go? Huh. I don't know where my, oh, here it is. Sorry for the delay. All right. Okay, so British pound is an interesting setup for tomorrow. So just let's review real quick. One huge 5 waves up, right? Clear as day from the September low. All right, culminating with the, you know, referendum, Brexit election, blah, 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 back in December on the 13th. What I'm finding interesting here, several things. One, if I draw a fork from the crash low in, the crash low in October of 2016, right? I use that as the first point. Second point is the April 2018 high. Third point is going to be the 2019 low. Look what happened. The 25 line actually has been pretty interesting in terms of crossing levels of interest or support levels, or providing support, I should say, you know, over the last month or so. Now, zooming in, right, this is a clear impulse lower, right? So I'm looking at that as bigger wave A. You have another impulse higher here in wave, small wave A. You're getting a 3 waves down, A, B, C, okay, and that's little wave B. So focus after this move lower is higher, right, to complete bigger wave B or little wave C of B. All right, sorry for all the letters, but that's just the way it works. All right, so today's low is actually on this wave 3 high right here, okay? You know, sexy to say maybe that we put in a low today because you also retraced a little over 618. However, if we do 2 equal legs down from here, you're going to get 29.82, right? You've also got these highs over here around 29.75, and lo and behold, you've got this beautiful trend line that connects the November lows 8th and 27th. Perfect support back on the 23rd. Intersects your channel line here over the next couple of days, and that's going to be, you know, kind of the low 129.70s. So I'm looking for support. I'm actually going to put an order in to buy in front of NFP. I don't really care about that, around 29.77. Right, see if we can kind of low tick a B wave here. You know, initial resistance on a reaction is probably going to be 31.30s, right? You can see it's pretty clear as far as the highs and lows for a bunch of days there. But ultimately, you could be getting up towards 33.30 if the interpretation of this wave pattern is correct. So this is an interesting opportunity heading into NFPs tomorrow for British pounds, okay? Okay, let's move on to commodity currencies. Another favorite setup of mine is Kiwi. So again, review here. What do you got? 5 up. So that's big 1, 2, big 3. Nailed that high with 67.46, by the way, right? 618 or 1618 extension. And we are now thinking that this drop is a fourth wave, and your ideal level for support is 65.80 to 65.90, right? You've got a lot there. Parallels, right? Parallel former resistance, watch for support. Top side of the March-July line, 200 period average on the 4-hour chart, which just that alone is just a great read for support resistance. You know, if I just pull that up alone, look at this chart. This is a great chart. Simple. Okay. So here, last March, right? Break, tank, okay? Not a lot of helpfulness here. Support here, break, tank, resistance, support. So that alone is a pretty solid tool, you know, to help in identifying key pivots, key trend changes in the New Zealand dollar, at least on a near-term basis, right? And again, we've got this line coming in right there as well. Okay, so this is probably my favorite dollar setup heading into tomorrow. I do like the pound setup as well. I'd like this one a little bit better because you're kind of going with the broader trend at this point, rather than being kind of fading into a bigger support level, but I like both, so what have you. So let's look for that 65.80, 65.90 support in Kiwi. And Aussie is pretty similar. So going to Aussie. Right, so this trend line goes all the way back to December of 2018, right? And very clean in terms of being resistance last year in July. It was resistance again in November. And now we are coming into it, which is about 68.40. So again, pay close attention to 68.40 for potential support. Again, I like the Kiwi trade a little bit better. You've got a clean pattern there. Here, I'm not sure what the pattern is. I guess you could have a 1-2, 1-2, but that seems to be stretching it a bit. Also, if I look at it, say look at Aussie, just on the decline that we had, you know, from up here, right, from December 31st, from New Year's Eve, it's not extremely clear. Is this an impulse, right? Is this a 1, you know, 2, bigger 3, you know, or is this kind of like a triangle, B, you know? I mean, it's not especially clear to me whether or not this is an impulse. So either way, with Aussie, obviously we live in the present. One of the first things I'm doing here is watching for support is 68.40. That's the only thing I'm doing right now. And if we bounce, you're going to have 69.40 to 69.60 is probably pretty decent resistance to sell into. You can see what that is. You've got the center line there, right, which has been resistance a number of times since September. You're also going to have the underside of the short-term support line here, which can be drawn a little bit better. Right, there you go. So really it's 69.60 is your spot. And if we actually drop 68.40, guess what? 618 is exactly 69.60. So yeah, that's awesome. So yeah, support, resistance, okay? All right, let's move on to dollar CAD. Daily chart here. All right, 2017 low. Perfect channel. Channel broke 2 weeks ago. I take that as a fairly important event, right? You break a channel like that, that's an indication the market has changed. So this bounce is welcome in order to get an opportunity to short strength. Remember, I noted that we thought maybe 30.60, 30.70 was going to be resistance. We went through there today. Obviously, we closed below it. We're currently trading 130.54. So for all intents and purposes, we are at resistance. We were looking at it based on this, right? That's it. I don't know. You've got NFP tomorrow, and you've got CAD employment, so you got kind of a double release. And the CAD data tends to move CAD much more, right? It tends to be a lot more. The market reaction tends to be more volatile. So, just kind of have to wait and see here. If we got a spike, right, up into the center line, which is 31.30s, old support there, old low, center of this congestion zone. The top region I would expect to see resistance if we are lower is probably 31.80. That's going to be pretty close to the underside. It actually is the underside of that trend line from back to 2017. It's also the 50-day average. So, let's put a zone from 31.35 or so to 31.80. And that would be, if we got up into that level and started to react, that's where I would expect to see, a short entry, okay? I also want to see something here, 31, I don't know. Okay, so I just went through essentially, oh, I forgot to do dollar yen. All right. Dollar yen. All right, so this is the chart from the other day. What we're looking at here is big impulse up from yesterday's overnight low, right? I still see support kind of in that 43.63 zone. Really can't do anything here. I mean, you're at the top of a range, but confidence in the short here is not all that great. I did note the 4-hour volume reversal that we had. The 4-hour volume reversal that we had, and on Japanese yen futures. So we could I'm looking for us to come off a little bit, but if we do, I'd be looking for support. Again, year opens 108.75, 200-day average 108.60. So kind of that region there, 40 to 60 looks like important support to me. But ultimately, that, if I just kind of scroll out here, go to weekly, I mean, look at that. That's huge. Okay. So that level up there at that 110.70 area, call it, is going to be just insane. And, jury's out on what the move is. If you get there tomorrow, it'd be freaking awesome. We could potentially get something of a fade up here at 110.70. And yeah, that's where my head's at. So, just kind of waiting on evidence here for dollar yen. But the big macro play is not going to be probably isn't buying at 108.60. It's probably looking for a fade up here at 110, 110.70 or so. All right. And that is all the currency stuff. You know, all the gold and silver charts that we went through yesterday, I mean, or that I went through on the post yesterday, you know, those remain the same. You know, you can see, like, here's gold, for example, right? Getting a little bit of a bounce here, probably going to be resistance off of VWAP from the high is 1570, right? It was 1580 yesterday, it's 1570 now. Little spike low there too from yesterday morning. Silver, you know, yesterday that resistance was 1840s, now it's 1825. It's also yearly VWAP, so I'd be looking there. Crude oil, VWAP off the low is going to be 60.70, so that might be all you get there. The big thing for crude, though, is, again, pay attention to 57.50 to 57.70. That's going to be the big level for support, I think. Or if you are headed higher in crude, that's where you do need to hold. You know, crude seasonals are positive. You know, just generally speaking, crude seasonals are positive kind of through like April to May, right? And then, you know, first half of the year is good for crude, second half typically not. That's just historical tendencies, right? Doesn't have to happen every year. It did happen last year for the most part. And gold and silver are still pretty bullish through mid-February on a seasonal basis. So despite those huge reversals yesterday, you know, keep an open mind, especially keeping an open mind with silver, because we're going to have those proposed supports a little lower, 1740, 1750. Okay. Gold and silver, though, yes, big reversals. So, you know, don't be in a hurry to buy them. Got to wait till we get supports and then get a reaction. Okay. All right. Okay. Other than that, I don't have anything else to add. So are there questions as we head into NFP tomorrow, or can I get this up and posted and archived for you guys? Leon, where does the NASDAQ bubble stop? Leon, that your question is one that I'm sure many people would like the answer to. So we put up a chart, I put up a chart yesterday. Let's bring it back. Okay, here's that chart. Okay. So this is that fork all the way back to 2001, right? On QQQ, okay? And we are above that level now. So yesterday, we talked about, what did I say, the 1618 expansion of the entire drop from 2018, so August to December. The 1618 of that is 221.27, okay? That is kind of your next level to measure, or next measured level, excuse me. If we draw a shift fork from the 2018 low, I mean, that was a beauty of support in October, right? The upper parallel for that would be the logical place to stop, if there is such a thing, and that's going to be closer to, say, 222, right? So that's my best answer, if you want to call it that, you know, for something to happen. You know, first, like, let's just at least call it a short or something. I don't know, but that's a level where I'd really pay attention to, Leon. So that's, you know, that's all I can really offer. This is the best look I've got at the moment. You know, that's, I mean, I have nothing else to say. So I hope that helps. Yeah, yesterday though was pretty nuts in terms of the volume stuff. You know, I mentioned the NASDAQ futures, right? So here was, okay, so here was NQ, right? NASDAQ futures, we had 2x volume at a 50-day high. I thought it was unreal. That's never happened before, right? That was the only time in history that has ever happened. Never happened. Never. These futures chart goes back to 1999. That's never actually happened. So thought that was pretty fascinating. So yeah. All right. Anything else? Living in historic times. Yep. They say history is made every day, but uh, certainly being made right now in the market with very specific, um, very specific instances or examples. All right, guys. Well, I'm going to shut it down and have a great rest of your weekend and get some good sleep for NFP tomorrow. All right. Take care.